Hello everyone, this is Scott Bear here at Mortgage Pro, and this video is powered by your Realty Pro broker, and this is what is new this week. Now you're going to want to send this video out to everybody that you know because it's very important. I want to cover some of the specifics of the new refinance program that the Obama administration has come out with, and they're going to be coming out with the finer points, all the finer points come the 15th of November, but we know a majority of the main points that I wanted to cover with you right now. Now the current program that's out right now is called the Home Affordable Refinance Program, or HARP, and this new revised program is basically being coined HARP 2.0. So they're taking away some of the limiting factors that have prevented a majority of people, or at least a lot of people, from refinancing their mortgage because of lack of equity, a very big point that they're trying to eliminate. So some of the finer points: you cannot have purchased your home or refinanced your home on or after the 1st of June of 2009. If you've done so, you're not going to be eligible for the program. So as long as you've done so prior to that date, everything will be fine. You'll be eligible for the program. Now they're removing the current 125% loan to value limit. So it doesn't matter what the value of your home is, because if, let's say, you have a value of $100,000, currently you wouldn't be able to afford any more or be approved for any more than a $125,000 mortgage. That's completely being erased. No more value considerations, and as a result, they're also not requiring an appraisal. So as long as they can obtain what's called an AVM, an automated valuation model, which is essentially a Zillow estimate, if you've ever heard of Zillow. It's just a computer underwriting model, and 99% of the homes out there can obtain a valid AVM. So we don't have to worry about appraisals. Very good thing. So that will shorten some refinance timelines as well, because we don't have to wait for these things. So very good thing. Now this program is also not being made available for those who have a ton of equity in their property. So you cannot have any less, after the new refinance, you cannot have any less than an 80% loan to value. So if you have a ton of equity, let's say you have 60% equity in your property, you are not going to be eligible for the program, regardless of when you purchased or refinanced your home last. And you currently have the unbelievably low rates that are out there for all the mortgages right now at your disposal. So go ahead and refinance if you have a lot of equity and you'd like to lower your interest rate. Now, also, they're making it very easy, or much easier, I should say, to transfer mortgage insurance from one lender to another. This has been a huge limiting factor, because right now, if you have mortgage insurance and you are eligible for the program, you typically have to go back to the same servicer that you're currently at, and this typically limits most of the people from being able to refinance because of other terms and restrictions. So this is a huge point. So if they can eliminate this problem from transferring from lender to lender, this will open the door for many more homeowners that currently have mortgage insurance. Very good thing. Now, you cannot have missed any payments on your mortgage within the past 12 months, and you can't have any late payments within the past 6. So this creates much less risk for the lenders that are going to be lending the money, and they just want to make sure that these borrowers are solid borrowers with good payment histories. Now, they're also going to be removing risk-based pricing fees from these new mortgages as well. This is a very big deal. So this should equate to basically lower interest rates on the origination side. Now, this is of course going to be limited to those who are going to be lowering the terms of their mortgage. They're trying to encourage people to lower their terms. So if you go from a 30 to, let's say, a 20 or a 15-year fix, they'll be eliminating these risk-based pricing, and they'll be basically lowering the fees for all the others. So we still should notice potentially lower interest rates on this program as well. And one of the last bits is very, very important, huge deal, is they're going to be waiving the certain representations and warranties for this program. And basically what that means is lenders currently have to take on a certain level of risk when refinancing the current HARP program. So they're more reluctant to refinance some people because of risk of buyback of these mortgages. Lenders hate having to buy back the mortgages that they've lent their money on. So they're going to be eliminating some of these not these risk-based, but some of these representations and warranties, and making it creating much more incentive for these lenders to lend money. Very, very important. So that's a big deal. Now, keep in mind one caution about the program, that we don't know how it's going to work out. It's not mandatory for industry participation in the HARP program, and will not be mandatory on this new revised program as well. So How lenders interpret these rules and regulations is yet to be seen, and so we're likely to see different interpretations from different lenders, and you're likely to see possibly some different what we call overlays, which would be basically rules on top of the rules that I've already disclosed to you today. So we'll see how it works out once the program actually hits the streets. But I will keep you abreast. Very good, though, from on the surface. It looks like it could potentially open the door for a lot of refinancing and helping people manage their payments and their cash flow much better by lowering their mortgage payments. So very, very good. So don't forget, you cannot afford to use anybody but a professional in this industry, especially during these hard times. So go with a pro, Realty Pro. We'll talk to you soon. Have a fantastic weekend. See you next week. Bye-bye.